Welcome back, traders, to today's trading session. In today's session, what we're gonna see is that I'm gonna do a potential analysis of the orders or entries we could have in the market, right? So what I'm gonna do today is I'm just gonna select randomly an asset. This time will be the Euro USD. This is the one I'm gonna analyze, and I'm gonna select a random date. And since that, we're gonna do the next. We're gonna select normal date, and from that, we're gonna try to analyze the amount of orders we could get in a week or maybe 2 weeks could be a good exercise. So we're gonna select March. Let's select Monday, the first 2 weeks of March. That's what we're gonna do. Okay, so March right here. Perfect. So now I'm gonna select March since the first of March. Let's see. Okay, that's the last thing I'm gonna do. So what we're gonna do now is the next. As part of the analysis, well, we're gonna see how the market behaves. This was the analysis we were doing the last session. All right, let's delete this. All right, so now we're gonna analyze the market. How is the behavior of it, and we're gonna see the potential entries we got from the 1st of March to the 13th of March. Okay, perfect. So as you can see right here, let's grab the analysis we got from the previous analysis. We are in a bullish trend in a daily time frame. So here we have this. This is a block that has not been mitigated by the price, so it means that it's potential the price to get to this order block, right? And what I'm having here is the range beginning. So this is the liquidity sweep. Then we have an entry in an order block, and then we have a boss. But after that, we have another potential block like this. No potential block, but this break of structure, this boss, will make us think that this is the beginning of a range. But as you can see, there is no actually any entry on this order block, so it seems that the price will get to this one. As we understand this is where we're gonna keep analyzing. Okay, perfect. So now we know that we are bullish in the daily time frame. Perfect. In 4-hour time frame, let me check how we are in 4-hour time frame. 4-hour. All right, I think we're bearish if I'm not mistaken. Yeah, look how I can determine we are bearish. Look, let's see the last range, which is this one, right? So in this range we have this. Here is the order block that causes the next. The price enters this order block, and then after this it makes a break of a structure with a bottom of the candle. This boss right above here. This one here. Since this happened, now this has become or strong low, or the low will be likely respected by the price. But since the price did not respect it and break it with a body of the candle, now this becomes liquidity, and now this is our boss break of a structure. Okay, perfect. Boss, nice. Now what you're gonna see is that we're gonna check for the strong high or the highest for the actual range beginning. That may be this one, maybe this one, can be this one. I think so. I don't like it at all, to be honest. Well, I will mark this one. I would mark this one. It's not the one I like, to be honest, but it's what the market is showing us in this moment, right? This is the range beginning. Here we have an order block, an order flow process. So the order block has been mitigated, and after that, the breakout has been done. Here it is. And this will become our strong high. So the high that will be likely respected. So in 4-hour time frame, we're bearish, and this is just a continuation of the bearish impulse. Now let's go to 1-hour time frame to see it even clearly. Here it is. So in 1 hour time frame, we are as well bearish, but I think this is the same 1 hour time frame range. This one that you're watching here can be potential one, but is not. Look, this high that is here is just liquidity. We're gonna grab it as a reference, but it's not the one we're gonna stick with here. Why we're not gonna stick with this one so far? Well, we have a boss here. Mhm. So imagine that potentially if the price goes down to this order block that is a daily order block and it starts a retracement, right? I wouldn't consider this high as a potential point res- of respect, let's say, or a zone of resistance. Why? Because as you can see right here, there is no or an order block, a real order block that back this up. So for me, this becomes liquidity as all of this, right? So if the price makes a retracement, I would say will not respect this high. Anyway, but we're gonna mark it because it's just part of the analysis we're doing. So this is the strong high in 1 hour. Temporarily, I would say temporarily. If the price keep continue going down, well, this would give more confirmations for this one. Yeah. So let's keep moving. Now this is the breakage. We have this even clearer. Now let's go to 15 minutes range or time frame, and let's try to find a 50-minute range as well. Um, okay, I'm watching here some things, very interesting things so far. Right, guys, look, this is what actually happens. Let's go and see an oldest range, and the most evident one. So I would say this one, right? All of this is an impulse of 4 hour time frame, but also in 50 minutes we can find the beginning of a range, which is right here. Look, the price entered in a order block, mitigates it, and they make a breakout of structure. So it means that this was the strong high. Now, an explanation why the price reacted here is because this is the 15-minute range, the previous one, no, the old one. This is the old 50 minutes range. Here it is. Right? And since the price entered here, look where the price reacted. It entered on a 15-minute decisional order block, which was here. And look, all of these lows that were here were just liquidity. Liquidity at the price, and then the price entered right here on this 15-minute range. And coincidentally, this is the same beginning of a range in 1 hour time frame. Very curious, right? Perfect. And boom, it continues with the downtrend. So in 50 minutes range, this was the strong high in certain moment, right? After this boss, people may think that this would become, but it wasn't because that was a lot of liquidity accumulated. So too many candles, too many highs or candles accumulated, right? And sorry, and um, after this retracement, yeah, after this retracement, it reacted into the decisional and then it goes down. So with this view, we can understand that this is the 15-minute range. It's not the 1 hour range, it's the 15-minute range. Okay, and now the price continue with its movement and it makes a break of a structure right here with a body of the candle. Right, this is cool. Nice. So as I said at the beginning of the exercise, at least in all of these scenarios we're analyzing, we are not yet in a bullish retracement. We are soon very close to a bullish retracement, but not yet. So as part of the exercise we said we're gonna do today, we're gonna we're gonna analyze potential entries using the smart money concepts in okay um from March the 1st. Okay, so let's do it and let's analyze it. Of course, I'm not gonna go down in time, right? Because the idea here is just to analyze why the price made what it did, right? March the 1st. So look, this is the okay. Let's start from Monday, March the 1st. Here is here. This is the time. Monday at 7 a.m. All right. So look. So this is the moment in which the price was, right? Right here. Or should I analyze? No, let's analyze a further week. I think it will be more comfortable. So next Monday would be on Wednesday. Here is Friday. Blah blah blah. Friday, Monday. Here it is. All right. So I'm going to analyze all of these potential entries. Okay. Yeah, I selected the previous range right here. What time is it? But no, let's do this. And if we have time, we analyze the others. Okay. Perfect. So imagine that we are here and now we need to understand why the price is actually reacting on this spot right here. So when I need to understand this is what I do. Most of the times it's because the price is reacting in a fair value gap or in an order block in a higher time frame. So that's why I mark the horizontal ray to select and see what's actually happening. And look, if we go back in time, we can see that the price is actually reacting in a 4-hour order block, right? It's a very old one. Yeah, it's mitigated. Yes, it's kind of mitigated. But more than that, it's the order block that causes all of this movement, right? And since this causes all of this movement and also is backed up by this, also it has this order flow reaction, right? Order flow means that one order block is mitigated and then after a certain fractal it is mitigated by another order block and then by another order block and so on. So this is the reason why we see that potential reaction in the price, like the one we're actually watching here. That's why the price had a reaction on this point. So most of the when the price turns around, it's because it's reacting in an order block that is most of the times old and it's not mitigated at all, right? So in 4 hour it looks like it was mitigated. So I'm actually going to 1 hour time frame to see if there is an unmitigated order block, and here we can see it. Look at the order block right here. Is this one? This order block, 1 hour order block, was the reason why the market at this point reacted in this way, right? So this is why when the price entered on this order block, sorry, on this order block here in 1 hour time frame, we have this retracement, right? And this is the reason, and this is what we need to understand. Now, another thing to consider is that if we were analyzing the price at that moment, and we go to 50 minutes time frame, which is here, and we see the range, which was this one, that was the range in 50 minutes time frame. We already have discussed this before, here and here. Right. So we have this impulse, perfect nice impulse, and then we have this breakage. But after this breakage, all this accumulation of highs cannot be determined as a potential entry point. So this order block that we have in 50 minutes is a really good indicator And since the price is now actually reacting here, this is what we have or we needed to bear in mind, right? And the first thing, it was this was on Sunday. Well, what we have to see is that if we find here a confirmation in 1 minute, that definitely there was a confirmation in 1 minute, it would indicate that the price will start or likely would understand will start or would start a retracement, right? Which is all of this is a retracement. Most of the people, most of traders who didn't understand the real price direction, which is the one that we have marked here, after seeing this retracement, they would think that the price is in a bullish trend and they will start buying, right? And all of this is just made to trap traders. Perfect. So let's watch the next. Let's go to 1 minute time frame to see the proper confirmation here, and then we go to 5 minutes. After that, we can actually start watching for opportunities to entry in the market, and this is what I want to do on this exercise, which is practice my ability of understanding potential entry points. And so when I get ready and understanding this even clearly, I will be able to do it in the real market. Okay, so what I'm gonna do is I'm gonna try to find a confirmation here. So remember that I left you a confirmation video uh, in one of the videos we got in the channel. Okay, so now we're gonna see the continuation pattern here. What is the continuation pattern? First of all, we need to find a first minute range, which is here. This is here is the price entered here, and then it make this break of the structure and continue going down. Why these highs cannot be a range beginning? Simply because it doesn't enter to any order block here, and this one could be one a valid order block. Yeah, but I don't like it that much, to be honest, because it wasn't respected. So it took the liquidity and it entered here. Maybe, let's say maybe. Yeah, let's say maybe. I don't like it. Anyway, I'm gonna stay with the one I marked here. Perfect. So this is the 1 minute range. After we got this breakage, we can say confidently that the market will start a retracement, right? A bullish retracement. Perfect. Now let's go here to 5 minutes range. And now I'm gonna look the 5 minute range. I would like to see the 5 minute range. Oh, it's the one I spotted here. This is the same. Look. So we have here the liquidity grab and then the boss. Okay. And after this breakage, we could see that was in London session on Monday. So after this breakage on London session, the price, this is what the price actually did. It confirms the movement, right? Since in 5 minutes we already got a confirmation of a potential order block, which was the one we marked here, this one, 4 hour order block, and then refined to 1 hour. So in 5 minutes we would need a confirmation. Here we have it. The price made this huge retracement, boom, and then it makes this. It makes the confirmation. So this was a potential entry point. Okay. So well, since I don't execute orders in the New York in the London session, I wouldn't enter at that moment. But let's see potential entries um, later on the price. Okay. Yeah, definitely. This exercise is much easier than the one I did in the last backtesting sessions because I already know what is next. Of course, it's easier for me. But being able to understand how the price behaves makes me or gives me room to understand potential movements when I actually start trading. Okay, perfect. So look, this is what I'm gonna do now. I'm just gonna mark here the order blocks. These are order blocks trump. Okay, the order blocks trump are order blocks that are against our movement, right? And are there to trap traders, okay, to that doesn't know the real concept of an order block. So they may think that this is an order block with potential, and they don't. They unfortunately think, or they start selling. Why people start selling? Because they see practically all the movement, all these movements selling, selling, selling. But because we already know that this is back up for a 4-hour time frame order block, and the price confirm it with this, personally, I know the price won't continue going down. Not from this point. It will take the liquidity that is above of the highs, which is here, which is all of the liquidity that is here, all of these highs. I know the price will take the liquidity of these people that is trapped, thinking that here is potential selling points, but they don't actually understand that we are in a retracement, in a bullish retracement. Okay, okay. So this is what I would have done. And now at this time, at 6:30, 6:40 more or less, I would go to 5 minutes, to the 5 minute time frame to spot opportunities to enter in something that I call the booster method. Here it is. Here. So how this booster method works is very simple. So once the price entered in my order block trump, which was this was the first entry here, I would look for a potential range beginning, the range beginning, in 1 minute. So we already know how the range begins. What I'm watching here is that if this would work, but no, it wouldn't work. It's not. It's not actually what I'm looking for. But look what the price does. It enters here. Good. Nice entry point. Excellent. Demand. Mhm. Then look, the price re-entered here. Right, and when the price re-enters here, what I would look for is a confirmation, and the confirmation would be in the next way. I would wait for a breakage of the highest high, which would be this one. This is the breakage of the highest high, right? Now, personally, after this breakage, I would look for the order block that causes all the movement, which is this one here. And I see this. I see, okay, this order block has already been mitigated. So as I using the order flow process, I would select um, the next order block, which will be this one. Mhm. Okay, and here I should execute the order in this one. I will put the order here, boom, right? And the stop loss would be here, below this low. I mean, this low here. Since now I have this 5 pips, I will put 5 pips. Let me check if I will be out or not. 5 pips. This will be my order. This is how I would execute this order. 5 pips. Oh no no no! I cannot put it 5 pips. You just have to put what it is. This one below this low. Yeah, 5.5. Oh my gosh. So 5.3 pips. That would be the stop loss I would put, and the next take profit will be at the closest high, which would be this one. Here it is. So it will be a 5 to 6 order risk to reward ratio. Okay. And it's the same principle. It's range beginning, then we have a boss here, break of the structure. After the break of the structure, I will have put the order here because this order block was not the one who was being mitigated. And I covered the previous order flow or order flow zone, which was this one. And that's why I would have this order. Perfect. That will be on, let me put the next. Uh, this is all New York session. This is New York session. So that was the first entry point that I would consider in this exercise here. This is the one I'm executing, and I have found another potential entry point, which is this one here. This is another order block trump, and I'm gonna do the same exercise. Find potential entry opportunities, at least in the time zone which I'm working with, which is in this time. I'm still available to find opportunities here. So let's see. Mm-hmm. Mm-hmm. Where is the order block? Here is the order block. Okay. So this is the order block trump. We already know that. And now here I'm gonna find another potential entry point, which will be, let me check what would be. What would it be? Hmm, I am looking here for a, this is the 1 hour range beginning. 1 hour. The 1 minute range beginning. But I'm looking here for another range beginning. Hmm, Alright, this one could be, I don't like it that much to be honest, but I'm gonna put it here. Why I don't like this that much easily? Because it's not what I'm used to see. Here. This is the order block, liquidity grab, and then we have here this. The low. Alright, since the price already entered here and breaks this with the body of the candle, I will find the decisional. I would say it will be this one. And neither the decisional. I think at this moment, this order stops being a booster method and has become continuation of 5 minutes. And let's go to 5 minutes range to see one thing. 1 minute time frame, sorry. So if I look here, this is the 5 minute order block, and this is a 5 minute potential entry point, right? Now look what happened. The price didn't enter to our zone. It reacted in another different zone here. And with that, we need to be fine because we already got one order. Let me check one thing here before. Yes, after this breakage of the body of the high with body of the candle, this would be a potential range beginning. But it was, look where it reacted here. Hmm. On the decisional. Remember I told you that this is a decisional, so that's why the price reacted there. Well, I didn't like it at all, to be honest. That's why I didn't want to put it there. But right, we now understand why the price reacted there. So the price reacted here. So this is a 5 minute order. Then we have a boss, and then it becomes here the 5 minute order block. This one, yes. Well, this is the reason why the price reacted here. Would it be a possibility for me? Not at all. I wouldn't have entered there, but anyway, I understand why it works this way. Right. So this is what happens. This is the day. What day is this? This is Monday, right? On Monday we got this order. I will have put the order the boss there or at the closest high, which would be this one there. Oof, will be a really huge order. Cool. Right now let's go to the next day. Next day is here it is. Right. So this is Tuesday. And this is what actually happened on Tuesday. So in Tuesday, the price entered here on the order block, 15-minute order block. And then what I would look here, it will be a 1 minute confirmation. Why a 1 minute confirmation? Because in 15-minute range, if we have 15-minute order block, we would like to see your confirmations in 1 minute. If it's 1 hour order block, 5 minutes. If it is a 4 hour order block, 15 minutes. Okay, I telling you pro tips now. Those are very important things to bear in mind. Now look, this is the beginning of a range, 15 minutes in 1 minute. Then we have this, and we have the break of the structure. Tuesday. Boss. Right now we have the confirmation here. Now, since I've been here at this moment, since I will be here at this moment in the market, I would look for potential entry points. And if I'm here, 6 at 7 a.m. here, 7 a.m. Honestly, I would I would put an order right. Okay, this has been mitigated. Perfect. So this is the reason why the price enter here. Entering this decisional. This is the 1 minute range. It was broken with the bottom of the candle, and then what we have to look for, it will be a range beginning. And look, the range beginning started here in a bearish trend, and this was the decisional. So the entry point was here. So I would look for an opportunity, and if I see the market like this, I would put an order here as well. Here. So I would put an order here. And look how interesting. Definitely this order would go to a stop loss. I would have put the order here. 6 pips. Yes. Uh-huh. So this order definitely would go to stop loss, boom, because of this movement. So I will have changed my mind or not, and I will wait for a second confirmation because the price is actually in a very we're first of all we're in a bearish 15-minute bearish impulse or bearish range. So even if in 1 hour, sorry, 1 minute, we have confirmations going upwards, we need to stick with the real trend direction. Okay, and after this, I found the next, this breakage. So the price take us out with this stop loss, and then it continues going down. Okay, so as the price continues going down, it confirms this. I will go to 5 minute range or 5 minute time frame. Sorry, and I would look for a range in 5 minutes, which would be this one right here. Yeah, this one. 5 minute range has been already pointed at, and now look at the next. We have this breakage. What would be a potential entry point here? We have two potential entry points to sell. The first one will be here, the original or extreme of movement creator, which is this one here. But the second one and the closest as well to the real price would be this one. So look, at this time, what time is this? This is, we got a confirmation at what time? At 1:30. So I wouldn't be working, but at least I would have spot the next. This decisional, and look how beautifully it works. The price actually creates liquidity, and in London session on Wednesday, the price provide us the entry, the the entry of the order, right? So since we don't execute orders in the New York in the London session, we're gonna look opportunities to enter the market in 7 here at this moment, right? At this moment. So at this time, I would be here. I would have seen that okay, the price is having this reaction, very cool reaction. Now we have this boss break of the structure, very cool, very interesting. Now what I would look for is like I'm kind of waiting this the continuation of a range in 5 minute range time frame. Excuse me. Here it is. The price enters here in the order block, and then it let us this beautiful thing that I'm watching, which is this the order block trump. This is an order block trump. Okay. Now we have to go to 1 minute and see potential entry points here or here as well. But because look, I think this order block trump would have gone to stop loss or break even. We will see. Right. So once the price enters here, I would look for the beginning of a range in 1 minute, which is what I'm actually analyzing here. Let me check where is it. And if you have further questions, don't doubt and ask me. By the way, let me check. Let me check. Will be the range beginning. Range beginning would be. So once the price enters here, I will look for the range beginning. Where is the range beginning? Here it is. Look. Easy to spot. Here. Range beginning is right here. So this is the selling sell supply. All right, so based on my experience, after we have this breakage, we would look for the entry, and the entry will be right here. Let me show you where. Since the price has let us this candle wick really strong, I would look for the 50% of a range, and in the 50% of a range, I will have put the order. I am pretty sure that I will be out. Yes. Yes, this order will be out. I will have put the order here. Let me check one thing here. Boom. Maybe here, maximum. Yes, yes. This order will have been out. So I will have put the order block here. Boom. It says 7 pips, but I would never have put 7 pips. Not in Earth. Maybe here. I would have put 5 pips. And you see, 5 pips and we are out. So the price actually causes all of this. But also, let me check with another thing properly. When I do all of this, the price causes this breakage, continues going down. Oh yeah, and it goes and takes the liquidity. Simple as that. It just it took all the liquidity that was above, including ourselves. So this will be an stop loss order. But look at the next. Still, we're in New York session, and here we will find another order block trap. And definitely, I will have tried to take advantage of it and see if we have potential entries here. Let's see. Right. So once the price enters here, okay, once we are out, because we were out, and we see all of this movement, I will wait for a price to get to the order block trap, which will be here. Here, once price gets here, I will start looking for potential entry points. That would be this one. Mm. So let me check one thing. It goes down, takes the liquidity, pushes down, turn. Then I go to 5 minutes time frame, and then I see all of this. The price enters on this order block trap. So respect this one. Yeah, here with this. And here I will look for a potential entry point. So look, the potential entry point on this scenario will be here. Yeah, the price didn't actually get completely to the order block, but since it's just this, meaning like less than a pip close to the order block trap, we already know it's having kind of a reaction. And then I would look for the range beginning. That would be this one right here. Look, range beginning. Why? Range beginning, then boss, and then we have a breakage. And in this breakage, it has led this beautiful order block here. And this block will be our entry point. So we will be out in the first order, but in the second one, we will be able to have a second chance. And the chance will be here. And with this chance, I will have put the other, it will be here 4 pips. I will have put 5 pips. 5 pips will be fine for me. Or should I put more? No, maybe 6. Yeah, 6 pips. And this will be the order. And I would have put this to 1 to 5 maybe. 1 to 5, yes. And I will have let the order flow and goes. And this is what actually happens. It actually went to the take profit level. Look here. Okay, gets to the order block. Good. Nice. So that was on Wednesday, right? Yes. All right. So now give me a sec, please. Right. Now here we are analyzing the price again. Perfect. That will be order. All right. On Thursday, this is the day Thursday, and since we are still bearish because look of this huge reaction of the price will be constantly doing these movements going down, right? Perfect. So on Tuesday, I will have entered here 645, kind of 645. Here is. So I would have seen the price going this down and look some of the reactions the price may have here. So the price is doing a reaction here, right, or this retracement because it's reacting in an order book, definitely. Very sure about it. Yep. Oof. No, no, not that clear. It's actually reacting on this, but it's not really clear. So for me, it would be even better to understand this scenario. 5 minute range. Now I would look for the 5 minute range. The closest 5 minute range will be this one here. Then we have a boss, break of a structure, and look, we have this one, and the price reacting on this. Look, the price reacting on this decisional. Boom, there you go. There you go. Yeah, but okay. Then I would look for another potential entry points that are here. After this breakage, I will find this order block will be a potential order block trump for sure. Here OB trump, and this will be another order block trump here. So let's do the exercise going back in 1 minute and check for potential order block trumps. So this is a continuation in 5 minutes time frame. I wouldn't put it because it was actually when I'm not working, right here. So let's try to analyze the first scenario that is here. First scenario is pretty evident. This range has been broken with the body of the candle, and then what I would look for after this would be that here it will be difficult, to be honest. It's not very clear range. So this is what I would have done. I would have marked this order block here because when the price reacts on the order block trend, it have certain kind of reaction, but you don't actually know when the price will likely reverse, right? It reverts here, but it could have continue going up here or even higher with a candle wick and then going down. So since for us is not that clear, I will have wait for the next, and then when we got this breakage with the body of the candle right here, I will have select which order block. Oof, this one, but I don't think the price would react on it. No, the price never reacted on it, unfortunately. It went even lower. Uh, and neither I would select this one. It goes back so fast, so it didn't allow us or give us a chance to see something properly. So well, that's why. What time is it? It's 11 o'clock. Maybe here I would look for another order block trump. When here, boom. What time is it? No, it's 1 p.m. No, it's late. Mm, well, no. No, so in Thursday, no opportunities. Well, yeah, there were opportunities, but no, not open at all. So okay, Thursday, Thursday, we're out. No, it's not clear. Mm-mm. Not clear for me. All right, Friday is not here, so let's see what actually happens on Friday. So once we got this breakage, the price will continue going, likely going down. Very sure about it. So once we have these breakages of the price with this, with like this, the price will start making a profound retracement. That's for sure. In certain moment, it would do it, and this order block will be probably, yeah, it will have a reaction on this order block. Look, this is a potential point of retracement for the price, and I think the price here would do a retracement, profound retracement, right? Why a profound retracement? Look at the next. I'm gonna show you in a minute. Since the price has already take the liquidity that is accumulated here, the price actually would get here and would make a profound retracement and then continue going down, or simply will continue going down and react here and continue with the retracement, right? Now let's see what actually happens. Let's go to 15-minute time frame and let's try to spot the 15-minute range as well because it has been broken with the bottom of the candle. This will be the new 15-minute range. Perfect. And let's go. Let's advance the time until. Oh, look, this is what actually happens. The price didn't respect the zone we were saying, and now it's going down. And here, I'm pretty sure here it would do the um, the pattern of confirmation. So where in this actually point, I would wait for a 5-minute range breakage. And if we have this range breakage, well, it means it's a confirmation. And with that confirmation, I will be able to buy in the market, right? But I think since Friday, I'm not so sure if the price actually will do that, the retracement. Mm-mm. Yeah, I didn't do it. Just came here. This is New York session. All right, now look how interesting what the price is doing is so interesting. This is a order block in which the price had a reaction. Oh, very close here. Here the price had a reaction, so this is the 5-minute range here. So when the price breaks this with the bottom of the candle, we can say we can start buying. Mhm. But this is Sunday, so that's it. Okay. All right. So yeah, the price is already tired. Let's say. Perfect, guys. So now let's see how many orders or how many chances we got. Each day we got at least one chance to buy or to sell, following the trading plan, right? So let's go from the very beginning. On Monday, we got this order here that was actually really, really well opened, and it was a 1 to 13 risk to reward, really good one. That was on Monday. Then on Tuesday, we got this stop loss, normal. And if we have put an order here, a decisional order, we have got a really nice order. Oof, very fresh, but okay, we weren't able. And then on Wednesday, we got a second stop loss here. So we have two consecutive stop loss. And the same Wednesday, we got this order here that I put it at 125. But if we will be able to see further, even we have been able to do like this. With incredible order, right? 1 to 14 risk to reward ratio. But okay. Then on Tuesday, Thursday, and on Thursday we got this opportunity here since but the price didn't open it, so that was a shame. And this one also was an opportunity, but I didn't took it because there was this retracement. This retracement was so fast, so that's why I didn't put it. But it's one opportunity, second opportunity. And on Friday, since I analyzed this too fast, I would say that this was a decisional potential order block or entry point. But since the price has already entered here, I already these are the riskiest order, most of the riskiest orders because we have already took the liquidity of the low, and here we expect profound retracements, right? So this is it for today's backtesting session. I like to do this sometimes so I can see with a already developed market how my trading plan would have worked. But this won't determine that I would have taken this in the real time because when we do backtesting, we don't feel the real emotions we feel at the market when we are executing orders. When we execute orders in the market, there is when we start feeling orders, anxiety, FOMO, and all of this emotions are the ones who also are against our odds, right? And make our opportunities sure, not sure, but less. Let's say, yeah, provide us less opportunities. Why? Because the emotions we backtesting, we don't feel emotions. We just watch very neutral. But in the market, we need to have that neutrality as well. Anyway, guys, thank you so much for watching this.